losing money is the best experience I have ever had because it woke me up and said, you need to get serious because what you just didn't work. How do you make it work?
So this was all just one night, like 10:30, you're like, something has to shift.
Something has to shift. It was a Friday night and my friends were out. They wanted me to come meet them and I was still hard at work. It was like 10 or 10:30 p.m. And I just remember thinking, wow, this season of life I'm okay with. I'm okay working hard, but this can't be my future season. At some point, I need to have the systems in place so that I don't have to work this way. And I need to have the infrastructure of people so that way I can do what I want, when I want, with those that I care about the most.
You had the aha moment. What happened next? What if I told you that you were one strategy away from predictable, passive income and total financial freedom? Well, today's guest has the exact playbook for just that. Today, I'm excited to welcome my friend, Justin Donald, to Mission Daily. Known as the lifestyle investor, Justin has redefined what it means to achieve financial freedom through passive income. He challenged traditional investment wisdom, retiring at the age of 37 before he even made $1 million, all through leveraging his strategies that go way beyond the stock market. Justin, I'm excited to have you today.
Thanks. It's great to be here, Stephanie.
I know I've been waiting for this. I think it's been about, 6 months?
Yeah, I was going to say at least 6 months. It's been a long time. Yeah. Long time coming.
I'm so excited. I want to start today off with a contrarian belief. Before we get into your background and investing principles and all that, I want to know something that you think is common knowledge or just acceptable in the world of investing that you believe is completely inaccurate.
Well, there's probably a lot of things. If I'm going to think of something off the top of my head, it's probably that there's this relationship between risk and reward. And in order to have like a great return, you have to be super risky. Mm-hmm. And I just don't believe that to be true.
Okay, well, what's the second one? Now that I'm like, we're starting off here, I need more.
Well, I think in the realm of conventional wisdom, you hear a lot of things, and a lot of the strategies that people teach are more about getting out of debt versus actually building wealth. And so I think as we can kind of dissect those and look at them in different departments, some people, by the way, they need to get out of debt first. Other people, they're in a good spot and they can really start looking to building wealth, and it's done a totally different way. But again, like that first point that I made, it doesn't have to be in a risky way. I mean, I love getting great returns with very little risk. In investing, there's always going to be some risk. It's impossible to mitigate all the risk out of it completely. But there are ways on certain deals and certain strategies where you certainly can minimize it, and maybe on select deals, even totally mitigate it.
Mm-hmm. When thinking about the getting out of debt, I mean, that's some of the most popular podcasts are, how do you cut out every coffee and get down to this much money per day? And it gets to a life where, at least for me, I'm like, that does not actually interest me, and like taking out all the little pleasures in life.
Yeah, and I couldn't agree more, because there is this theory of kind of like a scarce way of living. Let's budget the heck out of life. Let's be so scarce-minded that we can't even enjoy the drinks or the food that we enjoy. And I don't think it has to be that strict. I think in moderation makes all the sense in the world, but there's just so much dogma around, just this idea of thriftiness. I think thriftiness is great, can be great, but at a certain point can actually be detrimental, right? Mm-hmm. Like actually at a certain point that actually goes opposite of living an abundant life and having incredible opportunities. So I think, being scarce with your resources, being thrifty, there's a time and a place, there's a season for it. But I think that at a certain point when you achieve, at least if you're out of debt or you're on a path to financial success, I think it really is a hindrance to going where you actually want to go. Most people, at least, where I would believe they want to go in terms of passive income, financial freedom, those sorts of things, really compounding wealth.
Yeah. I oftentimes have gotten spiritual with you, but I also think that if you're putting that much energy into scarcity, like you're going to be resonating at that level of
I agree.
Scarce versus like, how can you attract abundance? How can you focus on where you want to go instead of focusing on where you don't want to go?
Yeah. And it's going to show up in more areas of your life than just that area. Mm-hmm. So if you're operating from a scarce mindset, that's going to show up in your relationships. It's going to show up in your work. It's going to show up other areas. And to think that we can compartmentalize that, I think is an error in judgment.
Yep. Yeah, I agree. So I want to go back through history, back to when you were in a 9-to-5 job. I'd like to hear a little bit, like quickly, what were you doing? And what was the moment where you were like, I need to shift out of this. I need to do something different?
It's interesting. Most of my working life has been, I guess at a certain point I've always been working for myself to a certain degree, but I worked under the umbrella of another company, and I figured out early on how to kind of create a business from that enterprise. So my first big aha was more or less when I was working more than a 9 to 5. So it was that I was putting in so much time and I didn't think the rewards were I wasn't being adequately compensated for that time being spent. I think work ethic is one of the greatest things that anyone can do. And I think early on, that was what I put, a lot of my satisfaction or pride in, is that I could outwork anyone. But I think if you have a skill set or you learn a skill set, you develop a skill set, you actually don't need to default on work ethic. You can default on intelligence and intellect, in having skills that are more of an outlier or, outperforming people based on that. And so before I think I had defined what my skill set was or where I wanted to go, I'm glad that I had this backdrop of work ethic, which I learned from my dad, and I was able to work really hard and I was able to get ahead. But that work ethic was actually hindering me from getting to where I wanted to be. And I had to work smarter, not harder. And that was actually a tough pivot for me. But it really happened sitting in an office of this, business that I had just started under the umbrella of another company. It was a Friday night and my friends were out. They wanted me to come meet them. And I was still hard at work. It was like 10 or 10:30 p.m. And I had gotten there early. I think I'd gotten there at probably 6 to 6:15 in the morning, which I consistently did for many years. And I just remember thinking, wow, this season of life I'm okay with. I'm okay working hard, but this can't be my future season. At some point, I need to have the systems in place so that I don't have to work this way. And I need to have the infrastructure of people. And ideally, I want to be able to pivot out so that my time is not dependent on income, but I have assets. I have intellectual property. I have capital that's earning my income. So that way I can do what I want, when I want, with those that I care about the most.
So this was all just one night, like 10:30, you're like, something has to shift.
Something has to shift. Yeah. And by the way, I've always been a big reader. And so I think that it was probably a breaking point. Like over time, I was reading a number of books and I was highly influenced by Robert Kiyosaki and much of his writing. And so I just remember, there were things that clicked along the way. Each thing that I read, I was more and more just influenced or closer to recognizing the way I was doing it wasn't the way I wanted to do it long term. And so I just think that there was a tipping point. It was just that season where I was like, you know what? I don't regret working hard. I don't regret basically starting a business, being a sole proprietor, no one else, no staff, literally no one but me. So I'm doing all the jobs, all the roles. I don't regret that because that was great experience for me. But I knew that if I kept doing that, if I kept that mindset, or if I kept that work ethic long term, it would lead to burnout. It would lead to, probably things that weren't as productive. And so I knew when I had a family, I didn't want to miss sporting events or school functions or anything. I wanted to be there for everything that my daughter did and not feel like I couldn't go to that, not feel like I couldn't cut out in the middle of the day to do something. And, I learned a valuable lesson early on that I thought I was a business owner when in fact I truly was, based on what the book Cashflow Quadrant says, I was truly a sole proprietor, meaning I thought I had a business, but really my business owned me. And I couldn't leave my business or it would collapse. And to really be running a business, I would have had to be able to, based on definition, a business can run without you. So if I can leave that business for a year and it functions at the same level or a greater level, that's a true business. I wasn't that type of a business owner, and I thought I was. And so that was the big epiphany for me, is I need to build the systems, the infrastructure, the people, but also that may not be the path. I might actually be better suited as an investor and invest in companies, invest in people, which I actually take more joy out of today. It's a lifestyle that I can scale a lot better.
So you mentioned Cashflow Quadrant. I'd love it if you can talk about what is this quadrant that influenced you, and hopefully we will put up a visual on the screen to be able to show it, but can you walk through the 4 quadrants.
Yeah. And so this is fun because I actually look at my life through these quadrants, and you actually went to one of the events that we did recently.
Yep.
And so I actually drew a bunch of different diagrams inside of a quadrant just like this, because it has been really, I mean, I would say this is one of my more defining moments. So on the left-hand side, you've got the entrepreneur bracket kind of right up top, the quadrant. Below that, sole proprietor. Above that, on the right-hand side, is the business owner, and below that, the investor. And so you have this, line, this axis through the middle where you're taxed the most on the left-hand side as an entrepreneur and as a sole proprietor, and you're taxed the least, and you have the most taxable strategies or opportunities to mitigate or eliminate tax as a business owner and as an investor. Mm-hmm. And I thought, wow, I am paying a lot in taxes, mm-hmm. and it would really be nice to move out of that. And I'd love my income to not be so dependent on me and my time, and to be so connected. And I feel blessed that I've been able to work harder and earn more, but it's still a bit of like, I'm still kind of chained to my business. Like my business still owns me, right? I'm not a business owner. I am owned. I'm enslaved by, something else. And I wanted out of that.
So what did that shift look like? You had the aha moment. What happened next? Did you just quit? Or was it like a slow ramp up to starting something else? So
what I did was I realized, okay, number one, I need to create systems. So I started building systems. Number two, I got the right people in that could do it. That could do a good job. And I had to get over that I was better than anyone else at those things, mm-hmm. because at that time I probably was. I was more trained. I had many more reps, but I had this realization that if I had 5 people doing 5 different things, even if they're not as good at me at those 5 things, cumulatively, those 5 things are going to perform way better than me doing each of them. Mm-hmm. And that was a big aha for me. And so as I started getting that going right in my business, I then said, all right, I can't be putting all my money back into the business. I need to separate it, because if I'm ever going to have assets producing income, if I'm ever going to own assets independent of my business, I need to start investing in those now. So the business, in theory, I know a lot of entrepreneurs, they put all their money back into their business. And I get it. That works for some people. For most, it doesn't. Long-term, what is it? 96% of businesses don't make it. I think it's like a huge amount don't even make it to $1 million. Most don't make it past 7 years. And it's like 99% after like 5 or 7 years, something like that. So, I mean, it's like all these entrepreneurs I know are pouring all their capital or most of their capital back into their business. And I hope that it works out, but actually the odds are stacked against them. Mm-hmm. So I figured, why don't I put some capital over here? Let's start investing in some real estate. Let's start doing some passive investing. I can invest as a limited partner in different deals as well. And that way, if the business doesn't make it, I'm still building wealth over here on this other side. So I was just kind of hedging my bet. What was the business at the time? Was it still investing in kind of like, I mean, you were like an inchpreneur in Cutco, right? Yeah, Cutco was the first company that I got started with. And so I worked under the umbrella of their company, but with my own business. So I kind of had my own recruiting and sales organization, similar to a franchise, not exactly a franchise. And that was a great first way to get started, because I ran most aspects of running a business, but I didn't have to do any of the fulfillment. Corporately, that was taken care of. But I did have to do everything else. I had to do all the hiring, the firing, the training, the development, and everything, on a sales capacity or a recruiting capacity inside that business and for that market. And I had also opened one of the Cutco retail stores, one of the first stores in the country. And so I was managing that production, that staff, that inventory. Yeah. I think so many people don't realize that there's a less risky path. If you're in, a 9-to-5 or you work for someone else, you can develop these entrepreneurial skills within a company. I mean, I did that at Google. Like the way that I ran a P&L and hired people and had a whole team under me, it was like very like training me to become an entrepreneur within a company where it was not as risky as if you just, jump ship. That's right. And your story is incredible. And I think if more people knew it and just took a step towards it, it could be a great way for them to, if they ever wanted to, kind of pivot and make that move the way that you have. I think it's incredible, because you kind of cut your teeth inside of corporate America, but you learn the skills that were going to support you outside of corporate America and on your own. So I love that. Thank you. So let's go into your investing philosophy now, because
It's very different than most people, invest in probably the stock market. And I loved when I was at your event where you were talking about, most people think the stock market is like traditional investing and that's where you should be. But when you look at high net worth folks, they actually are not really invested in the stock market. They are in other assets. And so I would love to hear about your investing principles, how you think about it now and how you teach people this.
Yeah, it's interesting because as a younger guy learning how to invest and having financial advisors and having people that I knew in the financial services industry, there was this education that I think was geared a lot more to mainstream America, but not really towards what the wealthiest people do. And so I just kind of thought that, hey, the way that they're teaching me to do it, the way I'm learning from all these other entrepreneurs that are investing in the stock market is the way you must do it. A 60-40 split between stocks and bonds, and now you're diversified. But the wealthiest people in the world don't look at it that way. And interestingly enough, this safest touted 60-40 split has actually been one of the worst performing splits several of the last few years. In the last century, pretty horrible performance. So the season matters. The economic climate matters. But for wealthy people, it's only a fraction. For them, diversification doesn't happen in one asset class. Right? Or I guess you could say two asset classes under, the public equities sector. And if you were talking to these people that have single family offices, so think billionaires, because they're pretty much the only ones that can afford a single family office, because you're talking millions of dollars a year. You have other people that do a multi-family office where they'll split the costs. The strategy is much different. Their exposure to the entire stock market is generally about 15 to 25%. I've seen it as high as 30%. And by the way, I've seen it as low as 5%. So, but 15 to 25% is kind of right in the middle. And why is that? Because number one, it's really volatile, depends on what season of the economic cycle you're in. If you're about to retire and the stock market crashes, it's rough to have all of your assets there, but that's what most of America does. So I'm not against investing in the stock market. I believe in our economy performing and outperforming over the long haul, but I don't believe in paying people. 95 to 96% of people over the last 30 years, depending on what, if you're looking at 15 years or 30 years, underperform just being in the S&P 500 index, which is the cheapest way to get in. So most people overpay for a worse performance than what they could do on their own. So I have major issues, I guess, with the misalignment in the financial services industry and with the people that have their money being managed by most services, most companies, because I just think that whole strategy is flawed. And the wealthiest people have figured it out. So over half of the net worth of the wealthiest people in the world, but let's specifically talk about the US, is actually in alternative investments. So private equity, real estate, private credit. And so if you break it down, it's generally about 15 to 25% in real estate. It's about 20 to 30% in private equity. I've seen it higher than that. You've got 5 to 15% in private credit. And if you look at just those three categories, so we could talk about fixed income, which is about 5 to 15%, cash or cash equivalent, 5 to 15%. And then everything else is, 1 or 2 or 3 percentage points, depending on what their allocation is. But most people don't realize that the wealthiest people play the game different. They have a much smaller percentage of their net worth with exposure to the stock market than the rest of America.
You also mentioned around your wealth advisors, they're probably not always showing you the numbers that help you see through this noise. And you had an example that I know the whole room that was listening, they got the number. Many people got it wrong, where you were like, if you're up 50% and then you're down 50% and then you're up again, where do you think you'll be after 3 years? And I think most people thought you were break even. And you were like, no.
That's right. Yeah, it's the craziest thing. Well, number one, there's also manipulation in the numbers that exist anyway. But, with that example, if you draw it out 4 years and you're up 50% year one, down 50% year two, up 50% year three, down 50% year four, most people think, oh yeah, you've got an average rate of return of 0%. And by the way, that is the average rate of return. but the actual rate of return is negative 46%. And for those of you that are like, how's that possible? Just take $100,000 and multiply it by a 50% gain, and then multiply that by a 50% loss, multiply that by a 50% gain, and multiply that by a 50% loss. And so the financial services industry for years, I feel like, has been very manipulative in the information that they show people, because their goal is to take as much money as they can, keep it as long as they can, offer as few of withdrawals as they can. The whole game is assets under management, and people are compensated based on that. So financial advisors don't really want you taking money that they could be earning a living on out of their management. And so that to me is a big misalignment, because if proper asset allocation was in place, and if that education was out there for the masses, they would know that it should be a much smaller percentage of what they probably have being managed, and at a lower fee than it's being managed. So I just had a horrible situation happen to me where the statements that I got when I had my money professionally managed said that I was earning more than what I really was. And so it was a complete manipulation, because my actual was negative, but the returns they were putting on the statement talked about average returns. And so today, I think the numbers are a little bit more transparent, but the fees are not. Mm-hmm. And some groups don't do a good job of advertising what's really going on. And so it's disappointing to me, because I think a lot of people who don't know better are being taken by this industry.
Yep. So for most people listening, they're probably like, I read Tony Robbins' book. I did Ray Dalio's principles. I am diversified, just in the way we talked about, is like, I'm in a lot of index funds. I tried to find low fee ones. That's what I was told to do. So for those people, how would you guide them, like, for their next steps of how to get into these other alternative assets, like private equity, which I think I remember was like a higher earning one and higher potential, but it's probably one that most people don't look into.
Most people don't look into it because they don't know about it, and there is a hurdle to get into. So I think our whole system has been, in essence, bought by Wall Street. I think Wall Street controls a lot more than people realize. They control the education and the collegiate academic arenas. There's a barrier to be able to get in for a lot of people with being an accredited investor. And I get that there are some safeguards that we should have in place so that maybe older folks aren't taken advantage of. But I do think that there is an angle of play here that is funneling most of America's money into Wall Street, so that they can do well, they can get rich, and unfortunately off of the shoulders of hardworking Americans. So I don't make, I don't give any financial advice, but I really want to challenge people on getting financial education. I think that most people outsource it, and they say, hey, I don't know anything about this, you handle it. All right, this is your job. This is what you're good at. I'll let you do it. But instead of taking ownership of it, they wait and see later that it didn't turn out the way that they wanted. I think we should bring that in-house. We should have at least some level of financial education. That's important. It's even interesting amongst the wealthy families. Why do they have exposure in the first place to the stock market? Though it's only 15 to 25%. Well, most people don't realize it's not for the return. It's that they can borrow off of that money to buy more alternative investments. So they use that portfolio as leverage, and hopefully it goes up over time. They're in it for the long haul, right? They're banking on the U.S. economy. But in the short term, they're getting utility out of those dollars back into alternative investments. And so I think it would be great for people to start getting an education in what alternative investments are, in investing in real estate, investing in private companies. If you think about the stock market, there's 3,500, 3,600, maybe around, it's somewhere between 3,500 and 4,000 companies listed on the stock market. So these are companies that you can invest in through stocks, through public equities. But there's, 10 million, 20 million, 30 million private companies that you can actually invest in. It's probably higher than that. I mean, there's tons. And so the majority of the companies that exist out there are on the private side, not on the public side. So to be only in public equities is just such a small sliver of the investment opportunities. And if you look at the track record, if you measure the numbers, measure the returns over the last 100 years, alternative investments or private investments have outperformed public investments by about 50%. So it's pretty staggering. So it's not a surprise why the wealthy and how the wealthy are making money. Most of them didn't make their money to start in the stock market. They made their money, then they diversified it and put part of it, 15 to 25%, into the stock market. But that's actually not where they made their money.
Yeah.
Most wealthy people make their money through concentration, and then they grow their wealth in a much safer, responsible way through diversification.
So, okay, for finding these private companies, I do remember you saying these are not startups. Where
That's
I
right.
think most people, when they're like, okay, I'm going to invest in a company, like my friend has this really cool company and it does this thing and it sounds like it's going to be changing the AI world. And then they lose their money because most investments like that don't typically perform. So how do you go about finding these private companies that are not startups that will get you cash flow and you're even able to identify them? Like, is it just in the local community? Is there platforms you're using? How do you find these?
It's an amazing question, and you're so right that, and I see this in the entrepreneur space all the time. It's like, well, I'm a great entrepreneur, so I know how to therefore invest in other entrepreneurs. There you go. It's a totally different skill set, and it's tough. You know, I'm an entrepreneur as well, and you know, we talked about my first business, and I have another business in the single family home maintenance space, and there's a few others I bought and sold over the years, but that one has become a very big business. It works with institutional owners of single family homes that use them as rentals, and will come in and do the maintenance on behalf of those. And so, you know, from an entrepreneur standpoint, I know what I look for, but if I didn't learn and develop the skills as an investor, it would have been really challenging for me. In early days, it was, right? In early days, I made some mistakes that really cost me severely, but we all need to recognize that there's a lot of ways to make money. There are ways that we can get ahead. There are ways that we can mitigate risk. And I think getting around other smart people is probably the first step. I think for me personally, one of my, I have 4 places that I love to spend money. And I think it's the best investment that we can make. Number 1 is peer groups. Number 2 is mentorship. Number 3 is education. And number 4 is experiences, and especially experiences with loved ones. And so I just think getting around people that are playing the game of business, playing the game of life at a high level is going to make all the difference. And I don't mean social media influencers.
Yeah.
Like if you're talking about mentors and coaches, the world of social media influencer, for whatever reason, today in today's day and age, people equate big followings with experts. And it's not, it's totally opposite. Just because someone is great at marketing does not mean they're an expert at the thing that they're teaching. And I just really have to caution people, as you're looking for mentors and looking for people to learn from, find the people that have actually done it, that have actually majored in and are experts in the thing that you want to get great at, and only then start following and learning and coach and educate from those people.
So you're trying to get into real estate, get around some of your friends that you know are great in that space, or find people that are
That's
probably
right.
not the influencers, because they are optimizing for, that's like entertainment. So they're
That's
optimizing
right.
for views. So they will say what they need to say to get, the audiences.
Yeah, and most of these influencers make money on the education, and they make a ton of it because they have a big following. So they make money educating people on a thing that they're not yet experts at. They might have a year or 2 or 3 of experience, but they've never gone through a downturn. They've never gone through a different, cycle than what we're in right now. So that's a big mistake that I see people making. Like, you have to find the people. If you want to get into real estate, find the people that have 10, 15, 20 years plus of real estate experience and follow them, learn from them, right? Instead of being the consumer of the products that people have. Outside the last couple of years, we are in a huge bull run for 10, 11, 12 years. So whatever you touched worked. It didn't matter how good you were. It didn't matter how new you were. Everything worked until it didn't. And so you got to be careful you're not learning from the people that don't know how things work in a different economic environment and season.
Yeah, I was talking to probably one of our friends and they were like, go find someone who was investing in the 70s, in the 90s, like someone who has seen so many ups and downs, not someone who's just been like, I've been doing this for a decade. That doesn't mean anything.
That's
Anyone who's been doing it 10 years, like you said, has had really great returns.
And I actually want to know like that people I've invested with have lost money before, because I think the greatest lessons I've ever learned in investing came because I lost money. I don't think I would have learned the lesson as well had I not lost money. Like it was a hit to the ego. It was a wake up call. I thought I knew how to do this because, like I said before, I was an entrepreneur. Therefore, I know how to invest in other entrepreneurs and other businesses. And that just isn't the case. Yep. And so if things were always going great, I don't think you learn great lessons there. I think you think, or at least I thought, I knew more than I really knew. Losing money is the best experience I have ever had because it woke me up and said, hey, you need to learn how to do this. You need to get serious because what you just didn't work. How do you make it work?
So I don't know if you want to share this, but what is the most amount of money that you lost and what was the lesson in there? I'm like, what happened?
Yeah, well, and it's interesting. I outline in a lot of detail this story. I'm always happy to share. By the way,
That's why I figured. I was like, I think
tons of mistakes. I would love for people to learn from my mistakes. Learn, please, vicariously through me. That way you don't have to make the same mistake, but recognize for most people, they're going to need to make some mistakes to really learn. But I invested in a Ponzi scheme, and early on, things looked good, right? Years and years and years went by, and it went really well. And the sad part about it is this business was actually a great business for a long time. It was actually a profitable business for a long time. It was actually not a Ponzi scheme for like 28 years. And then all of a sudden, the market shifted, some algorithms shifted, just the way business happened changed, and they couldn't get ahead of it. They started raising money. They took that money to pay back older investors. So a new investor's dollars paid in old investors' returns, which is what a Ponzi scheme is. And unfortunately, I was in the clear for, I had a friend that had been investing with these guys for like somewhere between 6 and 8 years. They never missed an investment. It was monthly distributions. They literally never missed anything in that entire time frame. I think I had 3.5 years, not quite 4 years of the same track record. And then all of a sudden it ended. And this company became a Ponzi. The SEC got involved. It became a really big deal. In my first version of the Lifestyle Investor book, I outlined it a bit, and I wasn't able to tell a lot of the story because I was working with federal agents at that point in time. There were federal prosecutors that we were going through, and I eventually ended up showing up in court and testifying on day one because of all the info I had from my due diligence. I'm pretty detailed in notes, and I won't go into all the specifics, but I just had a lot of data that was pretty relevant in this situation that really helped us as investors win. And in my new updated and expanded edition of the Lifestyle Investor, I was able to tell the whole story and everything that happened and get into the nitty gritty details, even of being in the courtroom. It was a crazy experience. But I wrote a whole chapter in the book called Murphy's Laws for the Lifestyle Investor. And it's all the lessons that I learned from this deal, like how it went bad, going from good to bad, and how I have since then not invested in anything like this. I've not been caught in a Ponzi. I've not had, as an investor, we're all going to lose money at some point in time. That's just the nature of the beast. The goal is that you obviously make more than you lose. And as you educate, you're going to get better. So, but since that situation, I've not lost money in that same way, and I've lost very little relative to it. But that was about just a tad under $1 million.
Lost. Wowie. So did you even start to see signs, or was it more that other people kind of brought it to your attention and then you started looking? Because it feels like it would be hard to know you're in a Ponzi scheme if you don't know what they're doing with their investments.
Yeah, I started to see signs, and that's when I started to take even more copious notes. I started to get more phone calls. I started to get more info. I started to request video conferencing and information being presented so that I had the ability to see it and capture it. So yeah, there were, at first it was yellow flags. It was a yellow flag, and then a couple, and then a few. But it's like when you get a handful of these yellow flags, for me, it becomes equal to a red flag. And in time, I started to see the red flags. And I knew it before it ever happened, before it was ever official. And I did everything on my behalf that I could to protect investors, all the investors. I didn't know most of the people in it, but you know, there were a couple of friends that invested with me, and I wanted to make sure I was doing right by them.
So I want to back up a little bit to earlier you were talking about, you know, surround yourself with the best people. And as I was thinking about this, I'm sure you went to certain people that were friends, that were mentors in your space to support you through this. Who are the people that you look to when it comes to maybe thinking about investing in real estate, whether it be friends or just someone that you're like, this person is a baller when it comes to this space, I follow their work, or when it comes to, you know, investing in private companies or any of those?
You know, it's interesting. I immediately went to my friends that were pretty high profile, successful attorneys. I have some that I worked with and some that were friends that have kind of played the game of law at a pretty high level. And that was kind of stop number one is, you know, do you agree with me? What do you think? Am I missing anything here? And I got some warning signs early on, and they caught some things that I hadn't caught, but because they caught it, it was on my radar. You know, I got a really good buddy who I've worked with for years and years and years. And he was a wealth of knowledge in this space. I also went to other investors that have more years than me to just see. And by the way, it's interesting because you think that, you know, some of these people you hold in such a high regard and you're like, oh, they're so good, they never make mistakes. It's actually really cool when you come and you say, hey, I think I made a big mistake. I think I invested in a bad company, a fraudulent company. It's amazing to hear how many of them have had that same experience. And it's like, oh, I'm not the only one. You know, a lot of people have had to figure this out the hard way. And every one of them said, hey, this won't feel good, but afterwards, it's going to be some of the best lessons you've ever learned, a very defining life situation. And that's exactly what it was.
Yeah. Okay, so I want to get into the details of some investments that you make, because when listening to the space that you play in, it's just very different of how you think about investing in a company. And so I specifically want to talk about I think it was a dog training company, because I think this helps ground it in, this is a space that anyone can play in, and there's possibly opportunities all around us in our community. And I think this one's a good one if you could walk through this.
Yeah, and you don't have to be an accredited investor to be able to do this, to buy a business, right? And I think that one of the best ways to get started, you know, I kind of look at two different parallel paths. So if you're someone that's had a big business exit and you're sitting on a lot of cash, you're in a different situation than most people. And that's a small percentage of people out there. Most people need to figure out, how do I create passive income, and probably not from a large amount of capital to start. And so you're probably going to take the slow route of investing in real estate or a business. Real estate is likely the slower of the two, but in a business, I feel like in real estate, as long as you buy right, it's hard to lose money, especially if you have rental income, because you're de-risking the deal every month or every quarter that you're able to take a distribution, right? You're making more money towards the investment that you've made. But there's probably a ceiling. You're probably not earning, you know, more than 10 or 15% a year in terms of appreciation growth. Maybe if you had a big value add, you could really grow it in year one or year two or something. But, you know, over the long haul, you have some sort of ceiling there. And by the way, you can expand the multiples by doing a roll up where you get you take a bunch of small properties and group them into one big one and sell it. And so there's some economies of scale there. But on the business side, you've got maybe more risk of losing everything, like the business going bad. But if it doesn't, if you understand that space, if you mitigate some of that risk and you buy right, there's the chance that you can have like an outlier type of return. And so I like that. I understand business. I think with the right operators, I'm at a season in life where I don't want to be an operator anymore. So I'm not going to buy a business that I have to run.
I think this part is very important because most people that I've talked to, they buy a business and then they are the owner of it, and then they're basically back to a 9-to-5 or
That's
more.
Right. More, because if you still have a 9-to-5 or if you have another business, now you just bought another job.
Mm-hmm.
And it's tough to get out of that, or it's tough. Like even if you think you have an operator and then an operator quits or doesn't work out and you got to let them go, well, who's the operator?
Mm-hmm.
You are the default operator. And so I'm very careful if I'm ever buying a business, it either needs to come with a great operator or I need to plug in a great operator and I need to have a backup plan just in case that person doesn't work out. And so the story of this one is pretty cool because there were enough financials that I felt really good about it. We ended up buying this business during COVID. So it was a super uncertain time. I think a lot of people had stopped buying, stopped spending. The world's going to end. We don't know what's going to happen. But I just noticed a trend that people were buying more dogs. Like in my own neighborhood, people that said, I will never get another dog, got another dog. People that said, I'll never own a dog in the first place, got a dog, and so I just, and these dogs are just wreaking havoc in these homes, right? Young puppies just ripping stuff up and going to the bathroom all over. And so I just saw it. I knew there was an opportunity. So I saw the past financials. They look good. I had an operator that could run it. And so with this business, we ended up buying it. The old owner was paying himself $75,000 a year to run it. I had a friend that had worked with me in another business that I brought into this business. He was earning $65,000 in corporate America. And that right there was like an easy $10K pay raise, like perfect. That's a win right out of the gates. And then I gave him equity in the business and actually majority equity in the business. And I realized I didn't have to do that, but I wanted to create a major win for him. And I wanted to set it up where, instead of him earning 5 or 10%, he could actually earn the majority in this business and on this transaction. So he is pot committed. But also, secretively, I just wanted to help buy him out of the rat race, right? Like this is, I'm huge fans of him and his wife and just wanted to see them do well and kind of move to the next level. And so in a year and a day, we basically transformed this company. We tweaked the SEO. We built better systems. We got better dog trainers in. We got more dog trainers in. We opened the window for how many dog trainers and dog training appointments could happen at a given time so that the calendar filled up. And we ended up selling this business at a year and a day. By the way, the year and a day is key because that moved from short-term capital gains to long-term capital gains.
Short term, as in you're going to pay a lot more taxes.
That's right.
Long term, you pay less.
That's right. Yeah. Short term, you're basically going to pay ordinary income taxes, and long term is much less than that. You're going to be in that 20 to 30% range, depending on the state you live in, and state and local and federal and all that. So that was a big win there. But the kicker was that we ended up selling this thing for it was an 11.9x on our money that we put in. And so I ended up putting in the cash to get this thing started. My partner was the sweat equity. He did a great job. I still think we probably should have kept this business, but he was eager to kind of get out. And, we figured we'd take some money off the table. You can't lose if you take some profit off the table. So we did that and we moved on, and the person that bought it from us is doing very well with that business. And I actually struck a little bit of a deal with the new buyer. So I still have some sort of income that I'm earning off of that deal as well, which is nice. But overall, it was a great business. And the way that I also set it up that was fun, that I de-risked for me, is that because I was the primary capital source, I wanted to get paid back first. So I did what's called an accelerated distribution schedule. So I'm trying to remember on that business, I think I did 80 or 90% was paid to me until the initial capital was paid back. Then it reverted to the actual equity splits. So I had all my money out of that business in, I think it was less than 4 months, but 4 months max. I had all my money out. So it was all upside and house money from there, which I love. So if the business collapsed, I've got no risk. And if the business took off, I could still get a piece of the upside.
Yeah, I love the way that you structure deals, and We won't go through all of it, but your book is really good at going through just the ways to be strategic with getting your money back, making sure that you're actually getting cash flow from a deal, how to identify risks. And so your book is amazing. We won't go through all of that.
Thank you.
But for this deal, how did you find it? Like, how did you even hear about this? And then how did you find a seller or a buyer for it afterwards?
Well, this one was actually word of mouth.
Mm-hmm.
And it's funny because we actually heard it word of mouth, just literally right place at the right time. And I had just been kind of paying attention to this. So when I heard about it, I was like, yeah, this really makes sense. But a broker was about to list it. So, and we actually had a relationship with that broker as well. So we would have heard about it two different ways, but we heard about it right before the broker took it. So we didn't have to pay that fee, which is nice. And it really was just an in-passing conversation that my partner had with someone that had talked about, hey, do you know anyone that's interested in a dog training company? And by the way, dog training company, that's like the furthest thing from anything I've ever done. I know nothing about dogs. I've never owned a pet.
Yeah, I was saying, you don't even have a dog.
I have no dogs, right? I know nothing about this. But what I do know is the demand that I see for dogs and how much people love their dogs. And, it was really cool. Patrick Mahomes, quarterback of Kansas City Chiefs, trained his dog in our studio, which is really cool. We had a well-known UFC fighter train their dog in our studio. And so it was really kind of cool to see, like, we became the studio, the place in the Kansas City area. Yep. And I knew nothing about it.
But how much time did you have to dedicate? I know you had an operator, but how much did you still have to dedicate in the beginning to make sure it was going to return what you wanted it to? Because an operator probably doesn't know to think that way, especially if they didn't put their money in, right?
They don't, but the structure really protects me in that. And I am a much more macro type of manager than I am a micromanager. And so I just would rather pick the right person that has the skill set, that is sharp, and that is, I guess, hungry to learn and willing and is just resourceful, willing to do whatever it takes, has a great work ethic. And then you don't have to micromanage anything. They're going to figure it out. And so, I put in, I don't know, probably an hour a month, maybe not even that, to look at financials. And that's really it. Wow. The operator there, good friend, John, he ran it all and did a phenomenal job. It's one of the best returns that we've had in an investment, especially in that short period of time. So,
okay, in this climate we're in right now, what opportunities are you spotting that maybe you haven't talked about, but you're like, oh, this industry looks good, or these small businesses and these kind of sectors looks good? Give us some secrets here.
Well, there's a ton of stuff. No matter what the economic season or environment, there's always good deals to be had. So I'm a big fan right now of, with more of the reshoring and onshoring that we're experiencing, trying to bring manufacturing back here to the U.S., increasing our trade with Mexico and favoring that over China. I think border towns and port cities become that much more important. So I've made many strategic investments there, whether it be housing, whether it be industrial, and for warehouses and distribution centers, like that all makes a lot of sense to me, and that's been really successful for our portfolio. I do like industrial in general. I think e-commerce is going to continue to grow, and last mile delivery is going to continue to become more and more important. So I like that. I'm a big fan of AI and robotics, which we see a lot of now, but I've been in that space for about 10 years now. And so I love that it's getting a lot of notoriety today, but it hasn't just become a thing now. It's been happening for a while. It's just now everyone hears about it. And so I do think there's ample opportunity for outsized returns there, but I do think you have to be careful, because part of the goal in investing is spotting, I talk about this in my book with Invisible Deals, it's spotting the trends before they're mainstream. See what a trend is looking like. And for us, it's what are the millennials doing? The greatest wealth transfer in the history of the world is about to happen, over the next 5 to 15, 20-ish years, with baby boomers, passing down their wealth to millennials. So how do they spend their time? What do they like to do for fun? How do they like to work? How do they like to live? How do they like to travel and shop? It's all these things where I think we're going to be able to spot trends early that end up having huge returns, right? And so there's many more than what I just mentioned there. I mean, pro sports teams now with the NFL passing some of the new rules with having minority equity holders, and you know, we're going to see big dollars there. And I have investments in many of these funds that are investing in pro sports teams. So I think that's going to be big. I think e-commerce is going to continue to be strong. I think SaaS in the right niches is going to be strong. I think the healthcare industry as a whole is going to continue to ramp and be a good place. I think biotech is going to be huge. I think quantum computing, so beyond just AI, I think that's big. I mean, the list goes on and on. I mean, I probably have 20 different niches that I really, really like.
Yeah. What do you think about, I mean, a lot of, let's just say, social media influencers in this space all talk about go buy the baby boomer businesses, and you know, they all have so much money just leaving it on the table and they have no one to pass it to. But then when I think about what you're saying about, you know, what do millennials like? I don't know if they like those kind of businesses. And so is that really a good place to go and source deals from? Or is it maybe looking at these kind of industries that might be maybe a little harder to get into than just going and buying a mom and pop restaurant, which I think restaurants are terrible, probably deals, but
yeah, restaurants probably wouldn't be my first choice. I think they're very high risk and hard to get right. And generally, even when you nail the first iteration, it's only going to last so long. Yeah. So that one I'm not as bullish on, but I'm really good friends with Cody Sanchez, and this is her, you know, space. And I've had her speak to the lifestyle investor community a ton, and I've spoken in her community, and her and I have done a ton of deals together. And one of the things that I do love and appreciate about what she talks about are these boring businesses. And by the way, it may not be millennials that run these companies. They may just get the dollars to sell them. They may get the ownership and want the money, right? So I still think the same environment exists where baby boomers need to sell their business. It's either passed down or their kids don't want it and they sell it now. I think plenty of millennials will. I mean, you can see the trends of people going to school for trades over, you know, different degrees going through the roof right now. And it's and being in a blue collar business space is becoming more and more mainstream or more cool. So I think there's ample opportunity there. And one of the industries I love are home services. I don't think that's going away. I think that that's going to continue to ramp up. You know, it'll be interesting to see what home ownership looks like over that time, but someone's going to own the homes, whether it's institutional or whether it's retail. Someone's going to own the homes and they're going to need work done. So I'm still a huge fan, especially with the highest margins that exist. You know, and by the way, the business that I own, Stellar, based out of Dallas, we do single family home maintenance for the institutional owners. So think of, you know, 1,000 to 85,000 single family home portfolios. And that's our bread and butter. And so I've seen all the numbers. I know plumbing and HVAC are your two highest margin businesses inside of that niche. And so I think, and there's tons that are great. Like, you know, I don't want to just specify those two. I mean, pest control could be amazing. And there's tons of other ones too. But there's ample opportunity in that space. I like it. I know it well. And I'm very bullish on it for the future.
Yeah. So good. So how do you think about compounding when you're in these spaces and now you have all this cash flow coming in? How do you think about, you know, compounding those investments versus going and investing more? Like, what does that look like?
You know, there's this balance here of how do I get the best return? But at the same time, how do I diversify so I don't have too much concentration in any single investment or any single investment sector or industry, right? And so these are things I'm always thinking about. And I think that most people aren't even good at making money. So if you're actually good at making money, you're ahead of the vast majority of the world. From there, most people can't manage money. If you make money, you're generally a horrible manager of money. And so you want to outsource that. Not that that's the best thing to do. Most people outsource it to someone who's actually also not that great at managing, because there aren't a lot of great people at it. So I think it's good to learn how to become good at that yourself. There are very few people that can multiply wealth. And I believe that is a gift or a tool set that I've been able to learn over time that has, really been a blessing for us and for our community, for lifestyle investors, and for our family. And then I think that we all have this obligation to really make money matter. And, I've got a friend that talks about that a lot. And, I think that is, the first time I ever heard about this whole idea of like, we need to make money matter. I've always known it. I've always lived it. But David Green, founder of Hobby Lobby, who I had on my podcast, The Lifestyle Investor, really talked a lot about making money matter and doing things with purpose and benefiting the world. And so I talk about this through that context and through that frame, really to get back to your initial question of like, how do we do it? Mm-hmm. Well, I think you first start off figuring out, what does it cost me to live per month? Survival income, just to get by, nothing fancy, nothing flashy. What does it cost me to live? From there, what does it cost me to live my current lifestyle on a per monthly basis? When you have those two numbers, this is what I really love helping people kind of walk through this. Well, now you've got a couple benchmarks. So let's start figuring out how to get some passive income to equal those numbers. So before we start doubling down and tripling down and over concentrating anywhere, how about we just work on the passive income, buy your time back, so that way you have the freedom to do what you want, hang out with who you want, spend your time as you want to, and you'll have a lot more time for reflection and clarity and what you want to do, next stages. So once you get to survival, then get to lifestyle. Once you get to lifestyle, focus on surplus. Once you get to surplus, the world's your oyster, right? And so this whole idea of like us early stage, like our goal as we first started investing, I would assume, you can tell me if this is true, but it's like invest or save 10% of your money, maybe 15%, maybe you graduate to 20%, maybe you've done more. At one point I graduated to about 50% is what I was investing of what I was making. And I was intentionally living a more conservative lifestyle. It's still a good lifestyle, but I wasn't falling into the trap of consumerism. And so all that surplus income would go to either impact or compounding our wealth. So now, instead of trying to save 20%, 100% of surplus now can go to multiplying wealth and can go to charitable endeavors that are important to my wife and I. And so I think that's really where the magic happens. And once you have this surplus income, let's start diversifying as well. Let's start getting into other areas. So if the sentiment of, the economy changes, or if, even sometimes we'll see it from like a legislative place where we'll see certain laws being passed that either make something more attractive or make something less attractive. Like we can navigate that a little bit better because all our eggs aren't in one basket.
So good. When you walk people through figuring out how much money they need, what's the biggest maybe surprises?
It's interesting if you really take the time to break down where you spend and how you spend your money. And by the way, for some of you, this may be tough, right? It might be tough to like carve out the space to do it, or you don't feel equipped. A lot of credit card companies already do this, and you can break it down. There's a lot of software out there that you could just plug a statement in and it will populate what's happening. So this actually doesn't have to be hard. Or you can hire a bookkeeper. You can hire a bookkeeper even from overseas. It's not very much money. So the bottom line is there should be no barrier to entry in at least figuring out what your numbers are. I have found that whenever you know the real numbers, you're surprised on one hand at maybe what you've spent in certain areas, but you're also empowered on the other hand that you can actually do this. And maybe you cut down here, or maybe you just get a little more aggressive with savings. And I think when you own the numbers, when you have the real facts of the matter, you are more likely to actually get the end result that you want. But I just think most people fly blind. Most of them don't figure it out because they don't want to know. And those that want to know, that don't make it a priority, don't want to know badly enough. But this is an exercise that could cost someone $5 an hour in the Philippines, where that's a great wage, and they could knock it out in a few hours. You don't have to give them bank statements. You could literally, you don't have to give them access to, your financials. Just give them redacted statements, and this can all be done in short order. So I just hope everyone at a minimum moves into the space of knowing what it is that it costs you to live, and knowing what it would cost you just to get by, because I think it will empower a lot of decisions for the better.
So I want to hear about, your personal life, because I feel like you have a lot of good values, the way you've structured, your family life and the focus on adventures and fun. Tell me more about how you came up with the values of your family and parenting.
The values, a lot of them are just kind of, sometimes it's innate or built in based on upbringing. And so I credit my parents to having, I think my parents have incredible values, and I think I just kind of took their values as my own. And at a certain point in time, I questioned some, and I dug for truth. And I just think they set me up really well. So big shout out to my mom and dad. I think the same for my wife's parents, who are just incredible people and wonderful and just life in general, but their values are great. And we aligned on that. But I think some of it's a discussion, like what do we value as a family? And I think it's also important to bring your kids into that conversation. And we've done that with our daughter. And then some of it, though, is for me as the breadwinner of the family, and as the entrepreneur of the family, I need to show up as the leader with boundaries. So what are the boundaries for me around work and around family and around travel? And how can I show up in a way where I'm putting my family first? Because what I did for most of my early career was I scheduled all the business stuff, and then family got the leftovers. Mm-hmm. And I can tell you that's not the best way to strengthen a marriage. That's not the best way to build bonds with the family and build a strong, for me, father-daughter relationship. And so I made a pivot a number of years ago where I said, no, actually, I'm going to schedule all the family stuff, and then I can work around that. And I actually need to get better at saying no. My wife has great discernment, and she says these things that in the moment I don't want to hear them, but they're really good upon reflection. And one of the things she said is, I know you like doing a lot of stuff. I know you like to say yes to things, but every time you say yes to something else, you're actually saying no to the family, whether you recognize it or not. And that was a very powerful thought. In the moment, I was like, stop it. I want to do all these other things, but there's so much truth in it. And I have to be picky. If I'm going to say no to the family, and say yes to some other event, travel, business opportunity, speaking engagement, whatever it is, it needs to be done the right way. It needs to be done inside of boundaries that I've placed for myself. It needs to be done knowing that I put in a lot of quality time with my family on the front end and the back end. And so, that stuff's really important. So for me, I don't work in the evenings. I don't work on the weekends. It has been that way for years and years and years. Even when I had a business, even when I had all these other things going on. And maybe you could say I lost money because of that. But if I'm going to lose something somewhere, I'd rather it be the business, the income, whatever it is, than I would losing on the investment in the family. Like, that's the better investment for me. And if I make less money, so be it. The reality is I probably haven't made less money. It's probably been equal. Or maybe we can argue I've made more because people appreciate those values. Or maybe we can argue that it's better because in order for me to pull myself out, I would have to have better systems and people in place that could handle things, which then allows me more flexibility and more freedom even during the 9-to-5 work day, work week, right? So I think that's important, but at the same time, adventure and fun and travel and play is really important. And we love going to Europe. We go to Europe almost every summer. We'll do extended stay there. We're in the process of getting our golden visa in Portugal and spent some time there or actually 2 summers ago. And we just love that. And as you know, I just got back from Hong Kong and Taiwan, and that was a really cool adventure trip as well. And Just got a chance to, I think we went to 10 to 15 different Michelin star and rated restaurants, and it was epic. It was wonderful. And we went with, there were 4 of us that are all lifestyle investor mastermind members, and we're like, let's just go explore the world. And it was an absolute blast.
So fun. All places I want to go. How do you bring your daughter into this lifestyle investor mentality? What do you do with her? And at what age did you start with her in this?
I love that question. And I feel like this is kind of something I want to be thinking about every day. How do I get her more and more involved in it? And, it's pretty funny. Even just this week, just yesterday, we played pickleball I'm playing in the Founders League here in Austin. And they've got a really cool property over at Millbrook. So shout out to them. And so I was telling my daughter, this is a place where the league basically requires that you're a founder. You have started a company. And she's like, oh, that's really cool. And I said, by the way, you are actually a founder. You've started your own company. You've got a jewelry company. And by the way, she's going to be in the Travis Heights Art Fair this coming weekend,
Amazing.
Both days. Yeah, she's got her own table, and we're one of the 15 or 17 stops, which is really cool. And so just seeing how she kind of like saw herself in a different light. And we actually bought her website yesterday.
Wow.
Like, business owners have websites. What do you think about that? And so I'm really excited about her and that business. It's called lovejewelryatx.com. And she makes amazing jewelry, rings, bracelets, necklaces, little, I don't know what you call them, but the little carrying, I guess it's like a necklace for iPhones or.
Oh yeah. The little satchel thing.
That's right.
Yeah.
So she's doing all this cool stuff, and I'm so proud of her. But it's having the conversations. It's talking about investing. It's talking about having lost money. Even to her when she has money now, we've done a great job as a family of instilling some of our values, which are save, give, invest, spend. Right. And so anytime she earns money, we put them in these buckets, and we talk about how she can get a return on her money. And it's interesting because for a long time, I felt like nothing was clicking. And then we did this business fair this one time where we built an Excel spreadsheet. And actually, my wife built it. And I've been trying to talk to her about break even. What is a break even? And she just didn't fully grasp it. And then all of a sudden, we have her entering the sales on here, and she goes, oh, it's at $0 now. Oh, now I get what a break even is. So now everything else is total profit. And I just love seeing the aha happen. But it was like, it just took, it took some time. It took some persistence. Visual aids certainly helped, right? And then now all of a sudden that's a concept that she gets because she has a break-even business. She has a profitable venture, but she saw like, oh, this was my first sale that was profit. Mm-hmm. Oh, at the end of the day, I profited this much. And so even her language around it changed. But we're just very open with what we talk about with money and investing and finance. And we just try to always include her and not have adult conversations.
Yeah. I think that's very powerful from a parenting perspective. I know my dad did that too. I think we talked about how my dad had Dad's Bank, and he would show me the power of compounding. And if you give me more money, I'll pay you interest on it. And it was helpful we literally had like a flip pad that we would look at every month to, compound our money. So super helpful.
That's really cool.
All right. So to close this out, I like to do lightning round, which is just quickly, I'll ask you some questions and you just say whatever's top of mind for you.
Okay. Sounds fun.
What are 2 books that you think everyone should read?
I'd say Cashflow Quadrant. I talked about it earlier. And The Almanac of Naval Ravikant would be the 2 right now.
Yep.
I think there's a lot of wisdom in both of those books.
So good. What is a favorite activity you like to do with the family?
Well, we played pickleball yesterday. We try and play a couple of times a week. And then my daughter plays volleyball now. So we play volleyball a lot too. Mm-hmm. That's my favorite sport.
Yeah, good. What is your favorite maybe investment? Maybe it was like the most surprising, or you're like that actually paid off in a very different way.
Ooh, there's a lot of directions I feel like I could go on that one. I want to be careful not to mention names, but I did invest in a company that had an opportunity to invest on the debt side, like a private credit offering that then gave an opportunity to invest on the equity side. And I had both. And so it was kind of like I de-risked the deal based on the collateral that was involved. And then the better I saw the company, because I got to see all the financials before we had the opportunity to negotiate an equity investment, it gave me a position of knowledge probably greater than what most people who had ever invested prior had. And so this company went full cycle. This deal went full cycle in a matter of 24 months for a substantial multiple that, it really just took being in the right place at the right time, developing the right, network and relationships to be able to procure.
That's amazing. What is a mentor that you follow that maybe isn't a friend, but someone in this space that you're like, anything they write, I will read?
Well, I mentioned Naval Ravikant, and I think he's brilliant on many levels. We're not friends. I follow his stuff for years. I've read his book, which actually wasn't written by him, but is capturing his tweet storms. But I am an investor with him, and his track record on early stage companies is second to none. And I feel very privileged to be an investor in his fund.
Yeah, he's a good one to follow. He did like Angel List, right? And
that's right.
Yeah,
he's been early on in a lot of things. He has countless companies that he's had huge exits on. He has done very well. And by the way, that's a space that most people don't do well in. That's a space where you're actually winning if you're getting 20, 30% of your bets right. And most people can't even do that.
What is a secret skill that you have that most people don't know about?
That's fun. I'm really flexible. That is a secret skill. You saw. I actually have the ability. And by the way, this was great during my season of martial arts, where it came in very handy for tournament fighting. But I can still put my legs behind my head, believe it or not. So It's super secret, silly skill, but I love it.
That's round 2. You have to just come on and do that first for 5 minutes. Hold.
And just leaving people with the thought. Yep. Just I don't know if this helps me or hurts me, but just throwing it out there.
Yeah, I love it. All right, last one. What is a big personal goal you have for the coming year?
Well, I really want to make major change in the world. And I just think that people are not educated properly on how to get ahead in life. And so, we've got, different masterminds and different groups that we teach in. And I just want to get education out to the world. I really want to get education out to the youth. And that's part of the reason why we started our new young adults program called Foundations, Lifestyle Investor Foundations. And I want, obviously with the books, the podcast, the masterminds, the online courses and master classes, I just want to teach people that there is another way. It's likely a better way than what most people are doing currently. And I just want people to know they have options. That's it. You don't have to do what I've done. I just want you to know about it, because it may be the better path for most people. Amazing. Well, I've already learned a ton from you. Every time I'm like, I meet you, I'm drilling you for questions of like, what are you doing? How should I be thinking? And so, yeah, thank you for teaching as many people as you do. Well, thank you. Yeah. It's a pleasure to be here. Love hanging out. I know, me too. Well, thanks for coming on the show. Where can people learn more about you, your book, your world? How can they find you? Well, you can get the book on Amazon, or you can get it on my website, lifestyleinvestor.com. I want everyone to know that all the proceeds of the Lifestyle Investor go to fight human trafficking. So this is a book that I didn't have any expectations of. I had no clue how it was going to do. Became a #1 Wall Street Journal bestseller and USA Today bestseller, and now is a top 1% of all books ever sold. Which is very flattering, but more importantly, we have now been able to put hundreds of thousands of dollars in play to buy real human life freedom. So the book can teach people how to buy financial freedom and create that, but the proceeds actually buy people's lives back. And so I'm proud of that. On Lifestyle Investor, they can, you can find anything you want there, from, the blog, which is free, podcast is free, book, master classes, courses. I mean, we did a tax strategy masterclass that I just think is incredible, and a vetting deals course, which is getting, just great great results. And same thing with mobile home park investing and passive income that we did a masterclass on that. So tons of stuff. We've got our flagship products of masterminds. We've got the Lifestyle Investor Mastermind, Tribe of Investors. But I think what might be really cool for your community is we do these consultation strategy sessions with people who are ready to figure out how to move from like point A to point B. Like someone that wants to, as I say at the end of every podcast, take their next step towards financial freedom. And these strategy sessions are usually $500 for anyone in your community. I'd love to just give it to them for free.
Amazing.
So if you go to lifestyleinvestor.com/consultation, you can talk with someone on our team and they can give you all the different paths that could make sense.
Oh, amazing. Well, thank you for offering that. Thanks for being a friend. Thanks for coming here today. And we'll have to have you back for a round 2 in the future.
Sounds fun. I look forward to it. It's always a pleasure hanging out with you.